Okay, here's our update on Dixie, the dollar index. This is a critically important asset, or index, I should say, because the direction that this index goes generally highly correlates with where other indexes are going, other like equities, commodities, or I should say other assets. So, and I posted this on Twitter. If you're not already, follow me on Twitter. I definitely post more regular updates than I post videos, as you would imagine. And as always, there is a link in the description to previous video about the dollar index, most recent video about the broader market update. I will say in that video I mentioned I think we're moving into a daily cycle low. The action today definitely seemed to confirm that, or I should say seem to suggest that as well for just a broader market, S&P, Qs, etc. We're going to focus on the dollar here though, but please take a look in the description for those links. And there's also a link to Cycles 101, both a video and a sort of detailed article. Take a look. There's a lot of information. My approach is definitely unique to the way some other cycle analysts, especially like ones that you'll see on Twitter. So definitely take a look. You're not going to learn it all in one day. Take your time, absorb the information, but there's some critical info in there, a lot of alpha, and it also will help. This will make more sense because I'm going through these videos with the assumption that you have digested that content, or at least have started to. So I'm not sort of explaining what I mean by daily cycle low or advancing phase, left translated, right translated. I'm assuming you've read that stuff. So we had our top on day 12. We're going to focus on the daily cycle right now. And it does look like we had our daily cycle low today. It is August 2nd, by the way, just about 10 p.m. So we are trading. The Dixie starts to trade at 8 p.m., I believe it is, every night. And so this will be tomorrow's candle, so Wednesday's candle, August 3rd. And so we are red right now. We did make a slight higher high, and I'll zoom into lower time frame to show you what this means. But it does look like we got our daily cycle low here. Now, you'll know the general rule of thumb among cycle analysts is we have to close above the 10-period moving average. So for the daily, it's the 10-day moving average. For the weekly, it's the 10-week, obviously. In this case, we did not. So this line here is that 10-period moving average. In this case, we did not close above that yet. And what you'll notice is that with cycle lows like this one, it generally takes a few days before we close above the moving average, right? Like this one didn't close there. That's how it works. You close generally below the moving average, and at some point you cross above it. As I explain in my posts, I focused almost exclusively on the trend, higher highs, higher lows, or lower lows, lower highs, or some kind of range action where you're not seeing either of those conditions. And so if you're waiting for a moving average cross, you're going to be late. I mean, look at this one, right? Like let's zoom into this here. So you had your low, this candle, and then once you went above that candle, you had your swing high. Once you went above this high here, notice it was a couple days before you closed above your 10-period moving average. But you could have got long on once we went above here and used some area right here as your stop. And so it allows you to anticipate if you're focusing on the trend versus moving average, for instance. And so I think this is most likely a daily cycle low. We will need to continue to have upsides, higher highs, higher lows to confirm that that's the case. But it's a bullish outside day, also called a fake breakdown. So we made a new low, and then we also made a new high, usually a pretty bullish signal. And if we zoom in onto the lower time frames, we look at the hourly. So the little poke up we had in that daily chart is this candle here. So that's the first candle of the day at 8 p.m. when we opened. And then the next candle, wham, this is a reversal. This is an hourly swing high. I hope you're following as you're looking through the videos on this channel. Multi-time frame analysis is a really important piece of all this. It's probably one of the most important pieces. Once we go below the low of this candle, which marks the high, that creates a swing high. Again, this is an hourly chart. And so this hourly swing high is why we're seeing that poke up again on the daily, where it looks like we poked up slightly and now we're starting to come through. So if this were to play out, we would fail through the other side. The same way that we started, we made a low and then we made a new high. I hope you're following. It's entirely possible that we've made a slight new high, And so now we could come down here and make a new low. That would be some incredibly volatile action, right? You know, you have a bullish outside day followed by a a bearish outside day, right? So two outside days. Again, an outside day is just a new when you make a new high or a new low, same candle. And so if we had a bullish one and then a bearish one back to back, that seems unlikely to me. I think we probably end up at worst consolidating on the upper end of the range. That said, I'm not here to predict. I'm here to observe and react. So like we're going to see how the price action develops over the rest of the trading day. And if we look at the weekly, this is really interesting and arguably one of the most significant things to be looking out for. Now you'll notice if you're tracking, if you're following, you'll notice I'm actually literally talking about the same pattern on different time frames, right? And the higher the time frame, the more important. So we're now talking about, so I'll just go back to the daily. I want to make sure people are following. We'll look at these just side by side. This bullish outside candle on the daily, right, where we made a new low below this candle here. So see, this candle made a low below this candle here, and then it rocketed higher. We could have the same thing happen on the weekly level because of this candle, right? This candle would be like, so the bullish outside daily candle is going to potentially create a bullish outside weekly candle. To do that, we would need to cross above this high, and that would be at 107.426, right? So about another 80 cents from here, something like that. And so this is week 9 of the weekly cycle. We do have a weekly swing high on week 6, right? And so once we went below the low for that candle, which is 106.895, right, we had a swing high. Notice I just said if we were to complete this pattern and make a new high above this week, we'd be above 107. So that would mean that we'd be above this swing high level once we cross above this line. That's a really powerful signal that tells you the swing high is no longer in play, right? That tells you there's high likelihood that this swing high is not going to hold. And on week 9, it's week 9. The last weekly cycle was 20 weeks. The one before that, 33, 20, 19. They tend to like to be in the 20-ish week range. You'll know from my videos, I'm not a big proponent of, overly focusing on timing bands. So we could easily get a longer cycle that's much longer than 20 weeks, or something that's even shorter, right? Like we've had short cycles, well, that's just 19. But we've definitely had, so maybe not in the last couple of years, but there certainly have been cycles that were, let's say, 17 or 18 weeks. And so we're just going to have to watch the price action here. But this pattern is probably the most important thing to look at, the weekly. And if you look at the monthly, think about what that means. I keep saying this. We are tracking the 36-month cycle, so the 3-year cycle. Last month, July, was month 18, so we're now in month 19. I talked about this in the previous video. Our best case scenario, or I should say one of the scenarios, would be that we remain an inside month this month, which means we stay inside the range. Because we had this really powerful candle, and then we had this really big pullback in July to end the month, which is our daily cycle decline that we were seeing. Again, multi-time frame analysis, right? So just to be like crystal clear, right? This big decline is this wick, right? That's what that is. This swing high on the daily, day 12 of the daily cycle, that's what started, these peaks are exactly the same, right? That's multi-time frame analysis, friends. And so if you think about it, and again, just to put a finer point on it, that day 12 peak, that week 6 peak is the same peak as the July high, right? The month 18 high. And so now we have to see, it looked like we were going to make a new low, right? Below 104.742. That's where we were kind of headed. You can see, as if the daily cycle decline continued, Again, we've had this rebound, and that's what it's done to this monthly chart. It's created, or monthly candle, I should say. It's turned it into a hammer. I think if you've been involved in charts for any period of time, a hammer is generally pretty bullish, especially if it's green. That said, this is a big potential supply zone. So it does feel like I would be pretty surprised if we just like shot up here. At the same time, percentage wise, it's really not even that big a move from here, is it? Right? So it's like, okay, so it'd be 2.5%, which is obviously huge for a currency, but on those volatile days, we have the jobs number coming up on Friday, and we have the CPI print coming up on the 10th of next week. I think those are going to be important turning points. We could easily see, 50 basis point move in terms of like percentages. You get a couple of those in a day, and that's already your that's your half. You're a good distance back to this high. Most importantly, do we think that month 18 was the high of the 36-month cycle, and we're now going to decline for 36 months? So lower lows, lower highs. We're going to have to see. It's possible, but this right now, and the fact that we're bouncing out of a daily cycle, if this is truly, this was the last day, like we're just starting a new daily cycle, you would think we're going to rally for at least 10 days, right? And so is that going to be enough to break this high? That's what we're going to have to see. But this is definitely one of the most important charts to be watching and understanding, and thinking about where we stand in that long-term cycle. What does that trend look like? I'll take a look at TLT really quickly, and I posted this on Twitter as well. Looks like we have our daily cycle decline beginning. Yet this was relatively short, but we did just kind of consolidate after this like big move down. And so I'm kind of expecting something like this, right? So this is your first day. We get some continuation. I did enter some puts today. That said, this thing is like really sort of, this move up and like this thing is pretty volatile right now. And like you can see a lot of times we end up getting a lot of consolidation within a candle. So it also wouldn't be surprising to just have this thing kind of chop around. If it's chopping around the lower end of the range, that could essentially be a bear flag. Again, we know that we're really late in the daily cycle. This is most likely our daily cycle high. That said, it's already day 31, so we may not see a ton of additional downside in terms of time. Maybe one of these sharp moves and then a move higher, which is why I'll definitely be looking to take the puts, to be taking profits on the puts pretty quickly. And most importantly, what's happening with the weekly, friends? We are on pace to make a bearish outside week. And that's what I'm kind of targeting with my puts, right? That we make a move below 116.43, right? Because we've already kind of started the move. And if this is our daily cycle decline, you imagine we have a few more days of downside. That easily gets us, a couple bucks of downside at least. So I'm playing for a move below here to sort of take profits. Also coincides with the 10-period moving average. Makes sense that we would at least test that, even if this isn't your cycle top. But this is raising the prospect that we just topped on week 7, which would be really ironic because the previous weekly cycle also topped on week 7. I mean, look at this. Isn't that eerily similar? I mean, look at that. So, right? Like this rally and then this rally. I mean, look what happened after that rally. We had this consolidation for actually more. I mean, this would have been a tough week, big red week, to be fair. But then after that, we consolidated for 1-2 weeks. This, you could kind of call this consolidation more or less, right? This is just consolidation at the lower end of the range. And then wham, a little more consolidation, wham, consolidation, actually a little bit of a rally, probably sucked some people in. And then you have your really big flush kind of lower. So again, as I said, potentially we could get a sharp bounce off of this daily cycle low. So I'm not looking to get too greedy with the shorts. But this is important to watch. I mean, look at this. This week. This looked pretty ominous, but then we continue to get follow through. So we could easily see something that breaks this low, and then we get a bit of a recovery, and then we continue to kind of move higher. So we'll have to kind of remain nimble. And on the monthly, it's the same pattern, right? The weekly is threatening to be a bearish outside week, and so now the monthly is threatening to be a bearish outside month. I'll remind folks though that in July that's how it started too. At one point, this candle looked a lot like this one, and then we got much lower, and then we rebounded, and we ended up basically back where we started. So I wouldn't get too excited. Yet again, look at this huge down move. And what does this look like? It's consolidation, right? This looks like consolidation, essentially a bear flag that's preparing for another move lower. You can see this thing dumping below 100 eventually. Which, right, so what is the current low is 108, right? So easily another 8% below our current lows. So that's the picture as I see it.